Okay. All right. I think I got everything fixed. Okay. All right. So let's just. Of course, I don't have that up. Okay. So we can hurry up and get through this part. So obviously tomorrow is going to be the 4th of July. The markets will be closed. I believe that we got all of Thursday's data on Tuesday, I believe. So we won't be having anything come out tomorrow. However, on Friday, we do have a lot of employment data tied around non-farm payroll. And depending on this 7:30 block, what this data states, this will definitely be market moving. And I would highly recommend not opening a position until after the market settles down from the reaction to this news. We've had a massive pump today. We're going into tomorrow with low volume. I highly doubt that we'll get any market activity tomorrow. However, anything can happen. But what I do expect is on Friday that there will be a lot of market movement. We've got a lot of players that's going to take off tomorrow. And my assumption is that they're going to want to short this market unless they're going to buy at all-time highs, which is highly unlikely. So just be mindful, and let's jump into the charts. Okay, so today on the Nasdaq, man, this candle, these two candles for today, who would have known that the market was going to take out previous all-time highs and continue to push further? Now, my assumption is that as the bears saw this market begin to trend up, they tried shorting the market as it went up. Especially the bears shorted this market once we got to this previous all-time highs, because you can see once we got a break of this high, we can see the stop run candle going higher. And let's actually look at a 15-minute and actually look at this on a 15-minute so we can get a better idea of what actually happened. Yeah, look at this. As the market broke out from this level, you can see that we got to move up. We got to stop run higher. The bears took it down, or at least the bulls took profit. And you can see that they found support right at that previous area, or that previous all-time high. And from here, we got this massive move up. And now the market is consolidating to the right as the market continues to trade. Now, again, we're going to have it's highly likely that we're going to have lower volume tomorrow. So I wouldn't expect a big move from this area. In my opinion, this entire move up was probably in preparation for today and tomorrow. And the market is going, and I feel that the market is set itself up for non-farm payroll going in on Friday's session. Now, being a bear in this market is definitely tough. You can't be a bear in this market. It's literally taking a gamble if you try to short supply. I mean, that's just how bad this market has gotten, to the point where the market is trading like it was trading during that first Fed cut pump up in 2020, where the market couldn't be shorted. You can get in at any location on the chart and the market just continued to shoot up higher. That's what the market feels like now. We did get this massive move down for the Bears once we reached all-time highs the first time, and the second day for the Bears was this move down. But for the most part, the market has definitely been bullish, and just shorting this market is literally account suicide at this point. So I will say that initially I did take a short. Well, actually, I'll get to the ES because I didn't short the Nasdaq, but I did short the ES, and I'm glad I got out of that short and flipped long because we would have missed this beautiful move to the upside. And it's how do I want to say this? It's definitely hard looking for bearish price action if the market is not going to rotate lower, and when it does rotate lower, we get unexpected sharp moves down like this. Unexpected sharp move down and all this bullishness. I hate to say it, but I don't think it's going to probably be on this contract. I hate to say it, but it'll be absolutely crazy if the market tries to do a gap fill. At this point, looking for the market to fill this gap is almost a slim chance to none, at least not right now. I think this gap, the way that the market is trading, is going to be unfilled for a while. Unless we get a massive move down, non-farm payroll, which is likely. We did get a sweep of this high. This all-time high, have been swept. We do have what appears to be a potential reversal pattern, a triangle pattern. If the bulls fail to protect this swing low, and actually let me see where it's actually at. So around, if they fail to protect 723, if they fail to protect this level, then it's highly likely for us to go down to 610 at least to fill this gap. The question is, will the market drop more than 400 points? 400, about 700. That would be almost an 800-point drop if we get a gap fill from its current highs to at least 610. At least 610. We don't know if the market is going to go down further. That would be an 800-point drop, which that is so hard to believe. I'm pretty sure we can get 800 points over time. But the way that these bulls have just been buying this market up, regardless of the news, regardless of how the charts are set up, that 800 points just seem unlikely. And as a bear, it kind of hurts to say that this market could potentially continue to go up higher. We may not get bearish price action at all. I think the safest way to trade this market now is to identify areas of support, and we have to wait patiently for the bears or for the bulls to take profits, get a massive flash crash down, have the buyers refill in potential areas of support, and ride the second wave if you missed the first one. that strategy has, or at least right now, seems to be the safest way to trade this market. Because being a bear, all you are is just liquidity to this market at this point. Basically, just liquidity. So we had a massive move up. I highly doubt that we'll get a move down tomorrow. We may chop to the side. We may chop maybe in a downward trend tomorrow, but I do not expect a big move that we got today. If we do get a big move, obviously we'll be prepared and we will adjust. But for right now, I think we chop to the side on the Nasdaq at least. I think that's what we do. But we're definitely going to have to look to see what happens overnight. And we'll make our trading decisions when we get into tomorrow's stream. So let's jump into this ES chart. So I did take a short on the Nasdaq during the pre-market. Apparently, that's the only type of price action that the bears can get. Bears, if you're not shorting the pre-market, then shorting it during the regular session, the cash session, is literally account suicide at this point. I did catch this drop in the pre-market. I believe I was up 10 to 11 points in this trade. I was looking for the market to trade back into the supply area. I'm sorry, the demand area around 545. This is where I was looking to take some profits here at this level. And from here, I was expecting the consolidation and the bulls to take over from this area. However, we didn't get that today. And because I didn't take my profits in this trade, I had to stop out of this one for a loss. And good thing that I stopped out of this one for a loss, because if I tried to adjust my stop thinking that the market was going to pull back, you can see after this initial pullback, the market didn't even have one red candle the entire day. And this is an hourly chart. No red candles. And that's why it's very important to respect your stops. Because the bears that were stubbornly in this short and continued to short it as the price went up higher, they became a liquidity donation for the market that kind of fueled this pump going higher. Now, unlike the NQ, the market is not too far off from its all-time highs. I think the all-time high is at 88, I believe. Yeah, so 88 is not that far off. It's less than 10 points away from its all-time highs. And we can see that the market is now kind of trading back into that range from the previous all-time highs. And ES is not an instrument where it bounces from an area like this. So with the ES, I do expect possibly a slight pullback into that 80 to 70 area, some consolidation, and then if the market chooses to trade up higher, we can see a move higher after a pullback. The ES is not the Nasdaq. It doesn't just trade to the upside. This instrument actually respects price action, and you can see that from previous price action that it just doesn't do that. It just doesn't do it. It needs a pullback first. It needs a pullback. It needs consolidation. It needs structure before actually continuing to move up. So that's what I'm expecting on the ES. It's just a slight pullback if the market does choose to go up. However, just like the Nasdaq, it did take out its all-time highs. It did sweep the liquidity above these highs. So I wouldn't be surprised if the market does reverse here. With all this bullishness, I'm not saying that it will, but I wouldn't be surprised if we do get a reversal. What I will be looking for is if price trades below this low, creating a break of structure below 60. I want to see if the bulls are going to come in around that 45 level. And if they fail to defend that level at 45, then I expect more downside. And as the market slowly chops lower, what ultimately what I'm looking for, I'm ultimately looking for that gap fill. Is that it right there? Yeah. Ultimately, I'm looking for this small, I think the ES has a 10-point gap fill. It's about 10 points for the ES to fill. But I don't think the market fills that gap until the Nasdaq fills its gap first. There's a lot of support at this 95 to 90 level. There's a lot of support here. And I believe there's a lot of support at that 88 level as well. So I'm expecting the market to fill these orders if we ever get down here first. We might see another pump, and then we might get that leg down versus it going straight down just to fill that gap. So we will see what happens. We will definitely see what happens with the Nasdaq and the ES. We can look at gold, and after gold, we can just be done with the stream. So we talked about this gold play last night. Honestly, what I was expecting for the market to get here at this 2360 mark. However, the market always outperforms your expectations of it. And we got to this area at 2374. What I expect gold to do, I do expect a retest. I expect a retest of this level. And if the bulls fail to trade price over this level and hold, I do expect for price to come back in to at least 360 or somewhere close. And that's where we might see a move up or a continuation down into this level right here, where this break of structure happened around 2350. So I do expect for the bulls to try to come back in overnight, but if they fail, this is where I expect the market to go here. And from here at 2360, either we're going to get a pump up or we're going to get a move down. So we will see what happens on Friday. And gold will definitely be influenced by the non-farm payroll. So if you're in a position, if you're not well positioned in gold before the news come out, I would highly suggest closing your position, waiting for the reaction, and that's when you can re-enter a trade. That would be my recommendation for that. And with that said, that's all I have. That's all I have. We'll do this again tomorrow. Hopefully all these technical difficulties has worked themselves out. My computer was just going through it, and I'm just glad I was able to fix it now versus this becoming a problem in the morning while we're trying to stream, because that's not good for business. We show up to work every day, so regardless, there's no excuses. So I'm kind of glad that we got this out of the way tonight. So, all right, that's all I have. We'll do this again at 7:30 in the morning or 8:30 in the morning, and peace out.